You took calls
took calls, and then I had a trend line going from where we at the high on the left,
from here
yes, all the way down to the upper edge.
to here,
Close.
or to here, to right here. Give or take.
Let me see. Oh no, it was the 51. I had the trend line at 51, 51, 58. That's what it was. So when it got near that, that's when I moved my position. I moved my stop.
Okay, over here, and you moved your stop to what?
Stop was moved. The first time I moved my stop was when I was up 20%. I moved my stop to break even,
Uh
and
huh.
then once I seen it was getting close to that 51, 58, I just moved up so I would take 10% profit if it didn't continue to go.
Okay.
And it came back.
When it reached 58, how much percentage were you at?
Honestly, at that point, once the stop was set, we was in here talking. We was in here
We were
before it
here
was
talking.
over.
Okay, so you pay
But
attention.
I looked over and it stopped me out, so I didn't even get to see
You
it.
didn't get to see how much you made
Right.
on this. But you see how it's so funny how this one little candle right here gave you 20, 30%. And this is what I mean by volume and volatility. Like one good candle with volume and volatility will make you more money than five little candles going up. And that's how options work. So you got in here. I can see why. But what setup were you trying to trade though?
That one was I just kind of replicated the supply demand thing we did earlier. Supply demand here at the from 43, 51, 43 to 48.
Okay. So you had a demand here. Okay, that's good. It aligns with mine. So you had a demand zone bounce. We came to it. Okay. And then you got calls here. You caught this one little candle up,
Yes, sir.
and you made 36%, or you made 10% because you moved your stop up. Okay, good. Okay, how many contracts were you in?
One.
One. Okay. Were you in the money, at the money, or outside of the money?
That one I did outside money.
Outside of the money. Okay, great. Do you guys know what the terms I'm saying? Do you know what they mean?
Mm-hmm.
Okay, I'll explain them in a second if you don't. Okay, so you got a contract that was cheap, like $20, like I recommended. You got in calls. It went up 30%. Um, but it came down to 10% where you got kicked out. You took profit. What would you grade this trade?
Uh, I'll give it probably a C or D.
Oh, why is C a D?
Cause it was making lower lows, like by the candles coming up, like what we just ran after.
Uh huh. I was making lower lows. Okay,
And I guess it did make a
I'm at a higher low
bigger low
here.
right after that. So
Uh huh.
maybe a D at most.
Okay. What would everybody grade that trade he took? This trade right here.
I'm not qualified to grade.
No, you're qualified. No, because this is part of your learning process.
So
Just
where did he get out?
he got in here, and when he got here, you moved the stop to 10%, and obviously he
He got
got
kicked
kicked
out.
out of the
Okay.
stop. What would you grade that?
See,
A C? Okay. Stephanie?
it's impossible to skip.
No, you can't skip.
Oh,
What would you grade that?
B.
A B? Okay, you gave yourself B at the best. What would you grade that?
Probably I like his I like the fact that he got in.
Like his entry? Uh
Like
huh.
his entry, but he probably could have waited a little bit longer just to get a little bit more information because we were already starting to. Because to me that looks like a everything looks like a either a rally based rally or a drop based drop. So I was just looking at that consolidation, like we're all those are like one big basin to me right there.
Mm-hmm.
So I'd rather him just had got a little bit more information, so then he could have made it took some more profit. Like because that one candle after he went up and got kicked out, then it's like okay, now we about to go to the downside. So
So you would have wanted him to switch sides and get into puts, is what you're saying.
yeah, I think yeah, I feel like if he would have waited, he probably would have got a little bit more information.
Okay.
Yeah,
I agree. Based off what we learned today, I
yeah,
wouldn't have been in it because it
yeah.
was below 50.
Because I'm just going off of what you showed us yesterday too about when they were consolidating
I
at
remember
the
on
supply
the line
zone
she was
Mm-hmm.
showing, you saw
and
some shit
how
timing
you
below that.
how
It just would have
touch that one's I guess that looked good, but
down.
I just would have waited a little bit more.
Okay, you'd have waited a little bit more. Okay. Now that you see this waiting a little bit more, um, what would you have done with, let's say all you knew was from here to here. Let's say this is all you saw.
That
Let's say
second
this is, oh my
with
gosh.
your hammer.
Okay, let's say this is all you saw right here. Okay. You knew from here to about here. That's all you saw. What would you do differently? You knew to about here.
right there, right?
Yeah, he got it
You
long
said like
here.
we can only see from here to there,
If
right?
you can see it till here, that's all you saw.
Yeah. Either that, I'm not as confident as you to go in off probably the second, but that third one, I'm running.
You're going short.
Yeah, I'm going short. Cause
Okay.
I just seen this guy James like
10 is under the 9. Yeah. But you wouldn't have seen this until 20 minutes after you joined to the train. Okay? Yeah, I know, I see what you're saying. Like, based on this one, you say we're going under the 9, you're going to start thinking short.
Yeah.
I completely think about it. What about you? What would you grade that train?
At least a C. I think it's a positive trade.
Okay.
And, I think that if he had been paying closer attention, he was doing other things. Sounds like he would have been able to execute and get out and be more profitable.
Definitely
So
got
he
some
could have been
profit.
better.
Makes sense. And what about you?
C plus. For me, currently he did make profit, so but it was overall positive trade.
Okay, great question. What would I grade this trade? Okay, I would grade the B plus. Why that high? Why you guys look at me like I'm crazy?
We want to know.
It's
Why
risk
that
management.
high? Huh?
Risk management.
Risk management number one. Okay, so here's the thing you guys have to realize. Now, I want you guys to think about this from a logical perspective. The market this whole time has been going what way? When we got to that
Yes.
level, where you guys cost, the market's been going which way?
Down.
What is everybody in their mama thinking the market's gonna go?
Um,
So do you want to be the sheep or the wolf? Great. If you're getting short here and it reverses here, what happens to you? You're clapped. In the morning, everybody also thought it was going which way? If you got in calls here talking about the trend, it's going to trend, what would happen to you? You'd have been clapped. Okay? Now, every strategy is different. You can trend trade. I'm a big believer in trading the trend. But when you're trading the trend, right, you have to make sure the trend is continuing. But when you're trading the trend, there's certain legs to it. So let's say this is leg 1 of the trend. You got it super early, right? This is leg 2, leg 3, leg 4. Here's things that you have to be conscious of as a trader. Number 1, you never know how many legs the market's going to give you. That's number 1. Number 2, if you're going to do this, when you take profits, has to be super what? Quick, exactly. Now, I want you guys to notice something. He was in that trade for how long?
Maybe 10 minutes.
10 minutes, okay? And in 10 minutes, you at least saw, what's the highest percentage you saw? 22%. And it still went up about half more. I think that trade would have ended, you'd have made about 35% on that trade. Now, if you can be in the trade for 10 minutes and make 35%, is that a good trade?
Yeah.
Great. Number 2, you did what I taught you. After you went up a certain percent, what did you do? What did you do? You moved your stop to what? Okay. Now you protect yourself. This is a system. Okay. I want us to think, what is my trading system? If you're getting in here and you catch the leg, yeah, you can put a stop here, which is true. But if you put a stop here, okay, does this invalidate the trade? Idea.
No.
No, it doesn't. Really, your stop should be where? Above leg 1. Does that make sense why I said that? Right? If this is the start of the hill and we roll the ball downhill, okay? The only way for you to truly know that the ball is going to keep rolling downhill is if it comes back over the top of where the hill started. Does that make sense? So really, your stop really should be up here. A lot of traders, when they trade, and I tell you guys to do this, is put your stop at the next high. That is the safest thing to do. But from a truth perspective, your trade is not really invalidated unless you break here. Versus where he got it at supposedly the what? The bottom. If it breaks here, okay, you're invalidated. You lost little money. This is why this is called an edge. Because most people don't trade this. Everybody in your mama is trading this. And yes, you can make money that way, but I've just showed you two examples where if you literally did it that way, you could have got crashed. Okay. Number one, we look bullish for the day, right? Look at this. In the morning, look at how we went up for 5, 10, 15, 20, 25, 30, 40, 45 minutes. And we're at all-time highs. Remember that. Everybody thought we were bullish. Now, let's count how many legs we went down. This is leg 1. This is leg 2. You guys see the legs? Okay. This is leg 3 over here. You guys see the legs? This is leg what? 4. Okay. If you're decided, okay, we're probably going to keep going down for the day, what happened? We started reversing. Now we started leg 1 upwards, leg 2 upwards. Then we reversed at leg 2 bullish. Now we went leg 1 down, leg 2 down. And that's what I mean by saying you cannot predict or control how many legs the market's going to give you. So if you're going to trend trade that, that's a good trade. But just create a system around that type of trading. Does that make sense? Does that make sense what I'm saying? Okay. So if you're going to do that, make sure you create a system around that type of trading and it involves proper risk management. Because let's say I went shorts here. Let's say I went short here because we're under the 9, right? And we broke this little thing. If I got in here shorts, we came here, okay, and I put my stop here, I would have been kicked out, right? But look, it came up and it went right back where? Down. You can't control what the market's gonna do. And now you're gonna, if the market was open and it kept dumping, you'd be like, oh my gosh, the market went down. I missed that. I got stopped out, right? So you have to develop a system that works for you. I'm just showing you what a system that gives you an edge where nobody's thinking it looks like. And number 2, because of the way this particular system works, you have to be willing to get stopped out several times. Like if I got in calls here, I probably would have got stopped out once here, got stopped out twice here, and caught this move here. But here's the thing I've learned based on my system. When I'm in a certain amount of profit, what do? Move my stop to what? Break even. So now I'm creating a system to protect myself. And honestly speaking, that 35% profit, I would have taken that. Honestly, I don't know what you were thinking, but I'm thinking
He's talking.
But you know what's so funny? The fact that you were able to do that with confidence lets you know how much faith you have in the system.
I mean, the stops help.
Yeah, and of course the stops help.
And
But
I
if
did that too, it was at the break even mark. So that was when I knew I wasn't gonna lose any money. That's
exactly. And when you trade this system, like when it moves quick. If I got in shorts here on leg 2, look at all the wicks that happen here. So if you're gonna trade this system, you have to be okay with dealing with all this wick action. I'm not saying what is right or wrong. I'm just saying trade based on your personality and what you prefer the best. This setup right here, look at how this looks almost the inverse, almost similar to what was on top. You see how you can start spotting it? If I was trading at this time and I saw this, oh, that's easy money. I would have went in with size. Once I see that, I'm like, wait, this looks exactly like this. Just inverse. Can you guys see that? Like the market structure? And we're inside what? Demand. And in pre-market, remember I highlighted this 5120 area? That's 3 confirmations that we're about to what? Rage. So this, I'm adding size. Heavy size. Like Milk and Honey size. No, seriously. Once we push up, like this little push, put a stop and break even. Once we get this move here, I'm going to move myself to like 40%. And then my next target is what? Supply. Okay? And what I'm going to tell you is this, right? What you did as far as letting yourself get stopped out is not bad. But the question you have to ask yourself is, how many times can you emotionally handle breaking even before you stop trading your plan and abandoning it? What do I mean by that? Let's say I get long here. I get stopped out and break even or 10% profit. Okay? I get in again. I get stopped out and break even. Okay? I get in again. I get stopped out at 10% profit like you did. Okay? Let's say over here. I get it again. I get stopped out at 10% profit. That's 4 times you've got to stopped out. Do you emotionally think that you can handle going in again the 5th time to follow the plan? Do you have the courage to do that? Be honest with yourself. Okay?
profits, I think I would.
Huh?
If as long as it was profits, I think I would.
Yeah, but what if you're breaking even?
I might be discouraged at that point.
Yeah.
You might be
Uh-huh.
discouraged, exactly. But look
Better
at
than
this.
losing. Better than losing.
It's better than losing. That's true. But that's what I'm saying. Like, once you have your edge and then you have a risk management system, the third part is the psychology. Because on the fifth time, you'd have been rewarded.
Because the system was actually working.
The
You got
system,
out.
the system was working. Exactly. So you have to trust the system because on the fifth time, you'd have been rewarded like crazy. But what I've done, because I know myself, was I'm getting a certain amount of profit in the system, I'm going to take some profits. So let's say I make 300 here, 300 here, 300 here. I'm up 1,000 for the day. Now on the fourth time, I'm getting that big move. That's how I've adjusted the system to my personal, emotional, like psychology. But if you just let yourself get stopped out, let yourself get stopped out, let yourself get stopped out, wait for the big move, you can still make a lot of money. Like even here, if you wanted to short here, now let's say you went short here, you got stopped out. You went short here, you got stopped out, break even. You went short here, you got stopped out, break even, or for a little loss. Now we hung around here for about an hour, but if you were waiting for that hour, look at all the moves you could have caught all the way to the downside. So just showing you how a system of trading helps you, and every system involves an edge setup, a setup that you believe works. I'm giving you guys 5. Number 2, a risk management parameters. Okay, so what do you do to manage your risk to reward? Okay. Number 3, psychology to be able to follow the plan all the way through, even if it doesn't seem like it's working. Okay, so when you go home and you're journaling and you pick like, okay, this is what I'm gonna do, you have to really be systematic about it and methodical and adjust it along the way based on your psychological profile. Because honestly, after 3-4 times of being stopped out, I'll be like, man, screw this. I want to go get a cup of coffee. I want to go step away. And I would have came back and I would have been mad and I missed the major move. So what I've done recently is I will take a little bit of profit off the table. So if I'm up 30%, like 35%, I'll put a stop at 25%. So at least I'm getting some of that money off the table. And then on the biggest trade, I wanted to push my way. Does that make sense? But that's how I've adjusted. But there's nothing wrong with just putting your stop at break even at 10%, like you said. So I'll give that a B plus. The only reason that it's not an A is that, like I said, for me, when I got 35%, I could take it down. Easy peasy. Especially because the 90 MAs right here, that would have been my profit target what? 1. Okay, great. So if I come to profit target 1 and I see rejected profit target 1, I'll be like, you know what? Profit target 1, that's cool. I'll take it. Because remember yesterday when I went long, where did I go long? We came to retest it. I said profit target 1 was what? All-time highs, okay? I let it break it, and then our profit target 2 was the pivot point. Remember that? And I let it get to profit target 2, right? And I took it. So when I was a beginner, I would always take profit target 1. Now that I'm more advanced, I'm patient enough to let it get to profit target 2. I'm trying to get to a point where I let it get to profit target 60. Okay, I want to catch like the whole move, right?
So you move up the stop when you go to the next profit target.
No, a lot of times, like, so let's say I get into a trade and I'm up $350. I'll put it to break even. When it gets to $600 in profits, $700 in profits, then I'll move it to $300 in profits. And then when it gets to like $1,500, then I'll move it to $700. Like every $300-400, I like to move it up.
So when you go to profit target 2, you can put the stop.
And profit target 1, exactly. Pretty much. That's pretty much what I do. Right? That's what I do now. To try to catch as much of the move as possible. I'm trying to maximize my trades now, right? So an efficient trader will be like, okay, profit target 1, I got it. Okay, good. Every time I take and profit, I'm going to take it because you're practicing following your system. After a while of journaling, you're gonna say, especially like you keep writing, I left so much money on the table. I left, and I can go back in the chart and see exactly how much money I left on the table, which is annoying. So when we went into calls yesterday, I got in at 35 cents. I wrote it down. Okay, I got in at where is it? Okay, I got in with SPY. It was a demand retest 90 MA bounce. Okay. I got in at oh, did I delete it? Okay. I got it, there it is. I got it at 43 cents. I took profit at 58 cents. That's about 30%, something like that. Okay. My stop was at 38 cents. So I was risking 5 cents. I made 15. That's a 1 to 3 risk to reward. I made $15 on that because it was one contract at $38 turned into $15 profit. That's almost 50%. That's a good trade. Okay. Now here's what I worked myself. If I stayed in, it went to 73 cents. So I took profit at 58 cents, but it went to 73 cents, which means I would have pretty much doubled my money. So I just wrote, next time put your stop at break even or secure some profits and let the market do what it does. I left choices on the table, shaking my hand. We were at all-time highs. We broke it, so I knew we would be bullish, right? So literally writing those things to myself, once you keep writing to yourself, I left so much money there. I let, like, you know what? At a certain point, I'm just going to do it. I'm just going to leave it. I'm willing to break even. So that's something that you guys are going to have to experience on your own. Any questions about that? Great trade, Alec. I appreciate you. Thank you. Thanks for coming.
Thank you.
Did you get your shirt?
Yes, sir.
Okay, awesome. Yes. Okay, who's next? Nina.
All right, everybody.
Have a safe flight. I did. Do you have the recorded one for me and Wasi? Because I didn't really trade yesterday.
You didn't trade afterwards. You were doing it yourself.
Yeah, he was. Yeah, and I didn't get I couldn't get my account open up. I still don't have my account open up, but
like
it's
the
recorded.
account.
The trade.
Yeah,
Yeah, Thinkorswim.
like the brokerage itself, you weren't able to get that.
Not
open?
Thinkorswim. No, he had me open it up under another thing so that I could use the simulation. No, we started Webull, but then I had to Tradeovate.
Oh, he helped you open Tradeovate. Okay.
Yeah.
And you didn't take any paper trades with Tradeovate either.
Not recorded.
Okay. So you and us took a trade together.
Yeah.
Okay. When he comes back, I'll have him. I'll have him show the recording. Stephanie, were you able to take a trade yesterday? I want to see you in the
Remember
professor's
why?
office. I want to see you in the professor's office after class.
Okay.
Okay.
I
All right.
I have it here if you wanna.
The
You
video.
can just. Yeah,
Let me
this
see
is
it.
it.
Can you send it to me?
Probably not. I'm not that tech savvy.
Okay. Okay. Is this a video?
Yes, video. That's a recording. So it's all talking.
Okay, let me see here.
Is that the one you was talking about?
Yeah.
How long was it? Say
It's only 6 minutes.
Yeah, okay. I'm gonna try to share
And I
it with
was not
myself here.
understanding. That's kind of he broke it down this morning.
What trades he took? Okay. Do you know what setup he was trading or no?
No.
Okay. So this is what I want you to do because this video is nice, but it's not gonna help you. This is Wasi trading. I know Wasi can trade. Okay, I didn't know if you can trade. Okay, so this is what we're gonna do for you, okay? Based on the chart here, tell me if you saw this where you would think about getting in calls or puts and why.
Which is the 50 EMA is the purple line, right? And the 9
The
is
50 EMA for me is my orange line right here.
or is
See
the
that
9?
orange? The 9 is the straight orange is the 50. The dashed orange is the 9. Okay.
Hmm.
And you can point. You can use the special teacher marker.
I'm not there yet. But let's see. So I would have seen that it was bullish at first, but like how you saying the lower highs around here would have made me think that we're gonna be going down. So maybe
You have lower highs around here. Okay.
Yeah. And then when it dropped even lower, I probably would have gotten either there or there.
Underneath the 9. Okay. Like around here or around.
Like yeah, somewhere around here where the highs were getting lower and lower. Well, lower and lower and lower. I would
Okay.
have been expecting it to go down.
And where would your biggest stop?
I need help with that too because I don't even know how to do the stops. But once I would have seen this, then I would have moved it up to break even.
Okay.
But
the VWAP
also,
was profit target 1 for you. Okay. Go ahead.
I would have been wanting to get out. Like after I seen this big drop,
Uh-huh.
or maybe
Yeah.
this drop, I'd have been.
You'd have been good. I agree with that. This huge drop right here would have given you a lot of profits, especially if you're getting in around here. So that would have been good. So here's the thing about stops. When stops are supposed to be placed naturally where your thesis is wrong. What do I mean by that? If your thesis is that the market is going to go down, the only place where you will know for certainty that you're wrong is if we break these highs with volume. Does that make sense?
Say that one more time.
Okay. If you think the market's going to go down,
Mm-hmm.
okay, let's say this is the top of the hill. The only way you know that you're wrong is if we go in the reverse direction, true or false. So if you're getting in here, your natural stop should be above the highs, giving you a little bit of room. So
But then
really,
that's taking loss. Though.
yeah, exactly. So if I got it short here at 51.84, your stop really should be like 51.94 95. You get that?
Okay, and I'm thinking more close to where I get in, so I don't take a loss.
So if you get in here and your stop is here, that's what people who are trend traders think. But look at how this broke that. So you'd have been stopped out, and then you'd have been bad.
So you got to give it a little wiggle room.
You have to give it a little wiggle room, exactly. But here's the thing: sometimes it'll come up here, and then they'll flush. So really, when you're getting into a short position, your stop really should be above the highs. Okay, above the highs of that particular day. That should be your natural stop. But if you do that, let's just do the math, right? You're risking from 85 cents to 93 cents. Let's say you give it a little room, 95 cents. You're risking 10 cents to go from 84 to 75. You're risking 10 cents to make 9 cents. Is that good risk to reward?
No.
Exactly. You see, that's not good risk to reward. And even though this trade worked out profitably for you, what if it doesn't? And that's how traders, they make money and then they'll lose it all in one move because their risk to reward is skewed. So if you're going to trade this way, you would have to put your stop above the 90 MA. So let's say you put your stop here, right? Which is not bad, but you'd have been kicked out, yes or no?
Yeah, would have been kicked out.
Yeah,
Right
this
here.
candle would have kicked you out, yeah? And then you'd have been back because you
Missed
missed
all
all
of that.
this. And I know this from experience. Because that to me a lot. So I've learned that really, if you're going to get into this move, you have to be willing to take the loss if it comes all the way up here. That is the only way the system works. In other words, you're going to have irregularities. For example, if I got into short here, this is a place where I'll say, okay, where did this leg start? This is the beginning of this leg. So above here would have been my stop. You see why I did that?
Previous highs.
Yeah, above previous highs. So this will be my stop 1. This will be my stop 2 over here. You see that? This will be my stop 3. So you see how you have like a lot of stops and you can get clapped either way? So, but for me, realistically, if I got into short here, which I liked, I probably would have put my stop above this one right here. This is a high wick. That would have been my stop. Okay? And you'd be good to go. So I want you to always consider when you're trading, don't think about how much money you're making. How much could you possibly lose, and are you okay with that? Because if this candle pop up was 35% up, if you were short here, that means you lost 35-40% on your move. If you're in that trade with 2K, you just lost $900. Are you emotionally going to be able to handle that? Yes or no? Right? You have to ask yourself that. So this trade entry wasn't bad at all because you're close to start. Not bad entry, but if you're gonna get in here, then for me, I'll tell myself I really have to be willing to hold to really hear. Really, and for me, that's a little risky because this is a demand zone. That's risky. So for me, I don't think twice about that trade. What I would have done is when we came up here again, this is my entry, 89 to 95, 5-point risk for our 10-point reward. That's a better risk to reward trade. Does that make sense?
Yeah.
So I just want you to start thinking in terms of risk to reward, because today was a day where the market was great. But I'm telling you, there's some days where the market is like super sideways. Okay, I'll give you an example here on this particular trade, okay? So let's say you went you went under the 90 MA, you went short here, right? And you caught this move. Great move. You caught this move, okay? But let's say you're still in this trade. Look at how we broke our stop and went all the way high and broke the highs and kept going. If your stop was here and you got in here, you'd have lost money, right? And what I'm trying to help you protect you from is there'll be days where the market will be like this the whole day, just sideways. So how do I make money on sideways days? Matter of fact, on sideways days, it's some of the days where I make the most money. Ask me how.
Oh.
Great question. You guys are so smart. You guys know just the questions to ask. Because your edge is at the edges. Have you guys heard me say that before?
I have not.
Your edge is at the edges. Okay, I'll give you a perfect example. Blue's Clues, let's go to the board. You guys know what Blue's Clues is?
Of course.
Man, you guys childhood, I'll be perfect, yeah.
I'm older than that.
Yeah, older than that? Were you watching Teletubbies?
Nah, I'm older than that. Come on.
Oh my god, only Teletubbies? Man, oh my goodness. I don't know what people tell to Sanford and Sons. I don't know.
Yeah,
Flintstones.
Jeffersons.
Oh yeah, Jeffersons. I used to watch the Jeffersons. The Flintstones. So, the Jetsons, yes, the Jetsons. Okay. So let's say the market is going like this all day long, just sideways. These are the edges. These are the middle. If you try to catch a trend day, you're going to lose money, or your money's going to be very little, because if you're getting in anywhere in the middle, the move is going to be so small, and the market's going to make you think it's going to keep going, then it's going to crack you the other side. But if I establish, like, this edge, demand zone, this edge, supply zone. When it comes here, I go what? Calls or puts?
Calls.
Perfect. And I'm getting at the bottom. I catch this move up. I take profit. What do I get here? Calls or puts?
Puts.
Puts. I go short. I take profit here. What do I get here?
So you just ride it.
I'm just riding it both ways. So I'm making so much money, but trend traders will be clapped. How? Because I have a system that works no matter what market condition is happening. Trend traders love days like yesterday where we had continuation downside and then we have a move up, but the market is not always like that. I'm telling you guys. Your system has to be able to work in all markets. The only time I don't trade sideways days is if like the edges are like this. If it's like this, I'll make money, but that's not worth it. I'll just step away. But if you have a good trend, a good sideways day like this, you can make 3-4 points each side. 300 this way, 300 this way, 300 this way, 300 this way. That's $1,200 for that day, right? But if you're getting in here, let's say you get into puts here, right? Your stop is all the way over here. By the time you get here, I'm like, I did not make any money for this trade. And on top of that, it's not just gonna go straight down. It's gonna go slowly, go up a little bit, then go down a little bit, then go up a little bit, and then just go like really yucky. Like for all that, that's all I made. Let me just stay a little bit longer. Pop. Because we're in the demand zone now. Right? So what I usually do on like sideways, I'll get calls. By the time we get here, what do? Let's say my stop is here. Right? My stop is here, I get calls here. We get like 30% way through the move, what do?
Increase your position.
I do what?
Increase your position.
I know this is our position.
Move up the stop.
Move my stop up to what?
Use halfway.
At least halfway? No, I move my stop to what?
First.
Break even. Exactly. You always want to protect your downside. People always say how much money you make. If you protect your downside, the profits will take care of itself. Okay, because you can only control 3 things in trading. You can control your emotions, you can control your risk management, and you can control your entries and exits. Everything else, you cannot control the market. After a while, obviously the market tends to go straight direction. You can see it because you have experience. But the mistake a lot of traders make is that they think that they can control the market, because here's the thing. The market can act one way for 3-4 years. But for example, the market was acting one way when Trump was president. As soon as Biden became president, the market changed. So everybody was making money when Trump was president for like 3-4 years. And all of a sudden, they started losing money. They were confused. How? Why? Because the president changed, the market changed. I remember the market was dumping, and Trump sent out a tweet. Believe in America again. We're about to have the best economic quarter of the year. We're doing really great. Guess what happened to the market? It went straight up. Okay? So back then we had a literal channel called Trump Tweets. Whenever Trump would tweet, we knew what was happening. Has Biden sent out one little tweet about the market? No. Okay? So he is like unrelated. Trump might become president again. What do you think that happens to the market when Trump becomes president? it's gonna change again. So you can't just be trading the same way based on what you think the market did last year or 2 years ago. If the market changes, and the thing about when the market changes, it's not gonna call you, hey Nina, Mr. Market here. I know you've been trading trends for the last few years, but I'm about to change, okay? You ready for this? I'm gonna change on Monday at 2 p.m. Get ready. Okay, see you then. Okay, thank you, Jess. No, it doesn't
Not
warn you.
that
It claps you. Then you'll be like, dang, you even give me a warning, nothing. But if you have a good risk management system, no matter what the market does, no one loss is gonna wipe you out. And matter of fact, you can take on more losses and still end up green because you have good risk management. That's why I preach it so much. As a trader, you want to make sure your risk management system works for you and adjust it. Sometimes based on your trading system, you might have to take on more risk than me. Okay? So for example, my trades might be, when I say a 1 to 2, you guys know what that means, right? That means I'm risking $10 to make $20. I'm risking $100 to make 200. When you divide it, it's all 1 to 2, right? But based on your trading system, I'll give you an example. One of my mentors, Carmine, right? He trades the band zones too. I will get in right here at the low, risking maybe two points. He waits for a higher low, which means he'll wait for it to come here, somewhere around here. So he's maybe risking 3.5 points, 4 points. But our profit targets are different. I know that if I get a little pop up, if I'm risking 2 points, I could get a little pop up, that's 4 points easily. But because he's risking 4 points, he can't afford to take profits here. He needs to wait for it to get to what? 8 points for him to get a risk to reward. So because our risk tolerances are different, because our entries are different, okay, how we trade, our profit targets are also different. Which is why I said, when you're trading and you're journaling, you're going to start to notice where your personal inclination is based on your entry. So Nina, we talked about your trade, how you'd have got in here. Because it gave you extra confirmation, right? Because you're getting lower highs, right? Very good entry, but because of that, your risk is a lot more. So are you willing to take on more risk? That's what you have to ask yourself. Me, I'm not. If I'm gonna be wrong, I wanna be wrong quick and early. So I don't mind getting stopped out 3, 4, 5 times. Some people hate getting stopped out. I hate getting stopped out. I want to just make sure that I have a more likelihood the move's gonna work out. So I'm gonna wait for, a lower high or something, then I'm gonna get in. Nothing wrong with that. But just know what that means to your personal risk to reward system. Make sense?
Mm-hmm.
Awesome. So that being said, what you said about getting in, that's a good trade. I would have gotten in there as well too. I've gotten in those areas as well too. But I do that understanding that I've opened myself up to more risk. Okay? All right, Stephanie, your turn. Where would you have gotten in where you got now? No escape.
No.
Based on what you know, I'm not asking you to be an expert. Where would you have gotten in where you have gotten now?
Give her a better part of the chart.
Better part of the chart?
Yeah, give her.
Let me see. Let's go to yesterday, because we were all here yesterday. Yeah, I'm sorry, I have all these lines on my chart, right? Let me move this. Okay, here we go. Is this yesterday's? This is yesterday's. Yep. Perfect.
Mm-hmm. A little closer, I can see.
You can't see?
No, I mean I can see, but I mean, like, can you make it the?
Zoom in?
Yeah, a little bit. I'm sorry, I don't mean. I feel like
You
you
guys
guys get
are
better
so-
too.
You guys are
Like,
so
you can
picky.
see
You
it
guys are
better,
so
like
big.
that.
You guys are so picky. Oh my gosh.
You know,
It's a- to see
honestly,
what's really going on.
But that makes sense. though.
honestly, I am not gonna lie to you. I really am still learning this, so I am not sure exactly where I would get in. I don't know exactly where I would want to.
Okay, let's start with just a simple question. Based on yesterday, would you say yesterday was a downward day where the market went down, or upward day where the market went up?
Great question. I don't know how to answer that because I don't know. I'm looking at this. I see it going up, then I see it going down, then I see it going back up right there. So overall, I'm not sure if this is considered an upward or a downward. So I think I'm just missing the basic fundamentals, and that's why I'm having a hard time trying to
No,
understand this very well. I'm getting bits and pieces of it, but putting it all together for me is a little tricky. So that's why I have a hard time answering these questions.
no worry, I'm gonna draw something for you, right? So you're right. We went up in the morning, and we went up later in the afternoon. But most of the day here, I would say, this whole side. You see, like this whole area right here, we went down,
Right.
right?
Mm-hmm.
So if you notice a trend like this, okay, one of the easiest ways to kind of make money and get into trades is if you notice a trend like this, look at where the trend began. So the trend began up here, okay?
Mm-hmm.
Look at where each leg was created, and then look for a retest of that leg for re-entry. So I'm gonna teach you guys a pro trick right now. Okay? You see how we went down here? Okay, this is leg one.
Mm-hmm.
Okay. We went sideways to create, and then we created leg two. You guys see that? One sideways here, this is leg three, right? And then we came down. Okay. Then we came back up, this is leg four. Okay. Now what I want you to notice more specifically, I'm gonna draw this to you. If you literally draw a zone around where leg three was created, you will see that's exactly where leg four rejected. Are you seeing that? So sometimes if you're gonna be a trend trader and I decide to do this, I look for a retest of where a particular trend started, a leg started, and if we come up to that particular leg and we start rejecting it, that to me is entry confirmation for continuation of that move.
What do you mean by a retest?
Okay, we created a leg sideways move here for a little leg down, but we came right up into that leg. Okay, you see how we came right up into this leg square?
And cross the.
We came into. Oh, let me because it's the same color. Let me change the color. Let me make it pink for you. The pink Power Ranger. Let's go. Let's see. Transparency. Uh-oh. Guess I'm being too transparent. Okay. Okay, perfect. Is it transparent? No, it's not. Let me make it more transparent here. Okay, you see the pink, right?
Mm-hmm.
This is where another leg was created, okay? It started another leg downwards, and we came down from that leg. Now we based around this leg and we came back up again into this little pink area, right? But if you notice, these four candles, where else did you see it today? This structure, this is what I call the four horsemen. Where else did you see this type of structure?
Right before the other drop.
Yep, right here in the beginning. Look at it. Very similar type of basic candle and lower highs. Same thing here. You guys see that? And same thing here.
So you can expect the same thing to happen. Yeah.
They look similar. Exactly. A lot of times they look similar. So if I see something like this, the four horsemen, I'm like, okay, this is a potential area where we can reverse or continue. Especially, it looks like it's rejecting, obviously, right? So I probably would have gone to short on this one. We came up here to retest it. I would have gone to short here. My stop will be above here. And then boom, I would have caught this leg down. This previous high day would have been profit target number one. You guys see that? Yes or no?
What do you call that? I see it. What would you call that? Like, what is this?
What is this? What? Like the setup?
What is?
Yeah, so it's just
like the four horsemen that you see happening here previously. Like.
Okay, so it's just pattern recognition. You can just name it whatever you want. I could call it the Skittles 4. Okay, I just call it.
Name after you.
Okay, I just call it the 4 because I've just noticed it over and over trading. Even here, look at this. The same type of, it's not exact, but similar type of thing over here. And if you notice, okay, a previous area of demand, a previous area of support. Okay, just like over here, how this previous area we based that we flushed. You guys see that? Okay, we came to it, we tested, we flushed. Same thing over here. We came up to that same area again, and what did we do? We flushed exactly. So in trading, if you can literally pay attention to patterns, the market likes to repeat itself. So for me, I can see that, okay, and this was clearly an area of interest. Look at how long we were around here. So if I was going to get short again out of demand, my thought process is number one, first two things. Let's say I missed this entry, right? We came to test the 90 MA. I would have went long here, and I actually did go long here when I got home. And my profit target would have been where? Here. You see why? Zones. So one thing about zones is that they act like magnets for price. And price likes to go back to where it's attracted to. Because what that means is there was a lot of sellers here, and as we started to go up, it started to become more attracted to this level. When we got here, we started basing. I would have definitely entered short. Even before this candle, I would have entered short because I'm saying, okay, we came up to this level, we're basing again, okay? We retested it, but created a lower high. You see the lower high here? I'm entering short right there, okay? And I'm trying to catch this move down, okay? See how we got close to 90 MA, see how we're basing again? It's just the same move over and over and over again. So once you recognize that about the market, you can be patient and wait for the execution. Let's go to another day, okay? I'll show you another example.
Hey Josh, real quick. Wasi wants to know what do you want to do about lunch?
Tell him to get the Ida Cafe.
Well, he didn't know if you put in the order or not yet.
No, I didn't put in the order.
Okay.
Yeah.
If that's the case, he wants to get everyone's order so he can go ahead and take care of that.
Guess everyone, like he wants
Like
to order
what they want to eat.
individually?
Yeah.
Okay. Tell him to just get a full, like, Jamaican food is not hard. Okay, let's do a vote here. Who's into, okay, who prefers jerk? If you like jerk chicken, put your hands up. Okay? Okay. If you prefer curry, put your hands up. Okay. If you prefer, yeah, you like skin, that makes sense. If you prefer brown stew chicken, put your hands up. Brown stew? Okay, you're by yourself. Okay, jerk wings. Tell them to get jerk chicken. Okay. A side of, exactly, plantains, rice and peas, and cabbage. This is Jamaican food. Like, it's not that much different. And tell them to add a small platter of, like, curry or brown stew for the standard
I can eat jerk chicken.
Oh, you eat jerk chicken? Okay, great.
Yes.
Yeah, get jerk. I like curry too, on the low.
Okay.
Jerk and then some curry. Like, tell them to get a whole full pan of jerk, a small curry chicken, okay, and then a pan of rice and peas.
Okay.
And then cabbage and plantains. Tell them to load the plantains, please. Awesome. Yeah, that's it. Okay, great. So here's another thing I want you to notice, right? And I just want you guys to notice the pattern of the market because it repeats itself. Okay, great. On this day, we went up, right? We came around to area rebase. We pushed up. When did we come back to retest? This area. So Alder went long here, caught the move all the way up, and now they're taking profits here. Does that make sense? Let's go to another thing. I just want to show you these patterns over and over and over again, how price likes to respect certain levels. This is what I call a sideways day. See how we did like sideways when we got up here? We didn't really move much. But if I got long here, took profits, got puts here, took profits, I would have made a lot of money this day. While a lot of people said it was sideways. Just an example. Let's go again, okay? Great. I want to show you guys something here. This is another day we were talking about right here. Okay, great. Perfect. Okay. We went short, right? We based around this level, pretty much. Okay? We came down again. And then we came back up to retest where? This previous level. So if I had missed this whole move down, I would have just waited for us to come down here, come and retest the previous supply. Then I'm getting short here, and now I'm catching the move down. You see that? Mm-hmm. So if you just like have supply and demand, just wait for retest and retouches. It's going to happen. See, here's a sideways day that if you try to trade the trend, you'd have been clapped. You see what I mean? If you say, "Oh, we're going to go short," we have to break this Did we break it? No. You'd have been clapped. That's why if you got in demand, you kind of, let's say you got calls here because you see it's demand. Even if you don't get a huge move up, you would have made money this day. 20-minute candle of move up, you get out, you wait for it to come back down, you get long again, and then you caught the whole move to supply. That's why I trade the system I trade, okay? Let me go to 10 days. Because I want you guys to keep seeing like these patterns over and over again. I've seen it over and over again, so I recognize it. But I want to, this looks very messy. But I'll show you an example here, okay? Where can I show you an example of what I mean? Okay, perfect. Let's use this for example right here, okay? It's pre-market, but this area created a demand zone. You guys see that? Okay. We pushed up. We came back down to retest it, and what happened again? We pushed up. We came back down, retested, what happened again? We pushed up. The market likes to retest areas. So intraday, when I'm trading, I always like to have levels. Look at it, look like we're coming down again, right? And we might break this, but if we break this level down and come into demand, my profit target when we come back up is where? Here. Do you know, does that make sense? Why?
Zone.
It's a zone. If we break this zone to the downside, and let's say we bounce here, and we start moving up, my profit target would be where? Here, the other zone. And if we start rejecting around this zone here, what am I going to do? Switch sides and go what? Short. And catch it all the way back down. So I'm just getting trade from zone to zone. That's all I'm doing. Does that make sense? And we can... Oh, okay. That's scary. Listen, I'm about to jump through a window. But let's do something that maybe I haven't marked up yet. Somebody give me a stock they like. So I said Walmart to me the other day. Have I traded Walmart before? Let's just say I remove all my studies. Boom, it's all gone. Okay, this is Walmart. Or Apple. I don't know anything about Apple. That has a lot of movement, okay? So this is Apple. You guys see this? Let's look at Apple. And I'm going to start, let's say I've never traded Apple before. I'm a brand new trader. And what am I going to do? Okay, I'm going to try to draw my zones first of all, okay? Let me remove all the studies. Let me remove all the drawings. This is Apple in all its glory. This is a weekly chart, okay? One thing you notice about Apple is this. Zones are created in areas where there's basing or consolidation, and we have a huge push after. So I will start from left to right. So what I would do here from left to right, let's say I come here this day, I'll say, okay, we definitely based here. And from this base, we pushed up. That's all I saw. So this was on June 17th of last year. It took us all the way of October, 4 months later to come here. But look what happened when we came here. Look at this push up, right? This is how you know these zones work. So what I would have done, if this was, let's say this was today, I would have done two things. I would have gotten a swing trade, number one, for like 2-3 months out, because I want to catch the whole move. And then I would have also day traded it, so I'm making money twice. You see what I'm saying? Great.
How long would you swing trade it?
So I'll put a swing trade for a month or two out, but if I've doubled my money in 5 days, I like to make my trade risk free. Do you know what that means, guys? Risk free trading?
No.
I'm going to show you.
As far as the time frame?
No loss.
No. So let's say I buy Apple contracts for April 19th, 2 of them. Okay? 2 of them, they cost me $500 each. How much am I invested in this swing trade? $1K. I'm real smart. I get y'all guys. This is fast food. This is a fast food. Okay, great. Based on that move, in the first 4 or 5 days, we would have doubled our money, yes or no? So let's say I'm now up 108%. So that means this 1,000 has turned to $2,080, let's say. This is 2 contracts. I'm going to sell one of them. I'm going to take $1,040 off the table. Now my original capital is back. This trade is now risk free.
You've already with your
No
money.
risk. No risk. This is what we call in trading infinite returns. So people say, why do you still swing trade? I was like, I love swing. I do both because I can do this infinite returns. Now this last 1K, look at how much that market moved. This last 1K could have turned to like 6K.
Over the course of a month or so.
Huh?
Over the
Over a
course of
month. And here's the thing about options trading. Let's say it's getting close to the contract and you're up 3K. You can roll over this 3K for 3 more months. You can keep rolling over your options contract if you think the move's going to keep happening. Because remember, the next supply, we haven't drawn it there, is here. So until it reaches there, I can stay in that trade, especially because it's risk free. Does that make sense? Guys, nodded. Does that make sense? Yes, no, maybe so. Okay, when I draw the supply zone, it'll make sense. But what I'm saying is that with trading or with finances, the ultimate goal is to have infinite returns, which means you have no money on the table and you're making money for free. So when I like to buy swing trade, I like to buy at least 2 contracts. So that way, if one of them goes up over 100%, I'm going to take one off the table immediately. And I'm going to let the rest ride. Whatever happens to that last $1,000, it doesn't affect your financials because you have your original capital back off the table.
But then would you get out up here? Because if you wait, don't you lose everything you made? I mean, you lose.
Great. So here's the thing. I was drawing the supply zone. This is my supply zone right here. So this would have been my target.
So you would have got
See,
out there.
charting is charting. Whether it's intraday or a year chart, charting is charting. So that would be my profit target. But guess what? Guess what you can also do? Let's say that last 1K goes to 3K in profits. What can you do here if you know me?
Take profit.
Yes, depending on how much you can handle your wins, but what else would you do? What else would you do? Put a stop, exactly.
Okay.
Oh, that's not what she said? Oh, that's just stop.
Yeah, yeah, over there.
Could have got credit for that.
I think you got credit. You could have put a stop at break even. You could have put a stop
2K profit.
at 2K profits. You could have put a stop at $2,500 profit and just let the trade ride. That's
I wanna
it.
do that.
That sounds like a good idea, right?
I'm still new.
But that's why I wanted to show you guys, like, I know you guys are good. I went over this on Thursday, how to like pick swing trades and then the stocks that we trade. But yes, so when I'm buying swing trades, I always like I would rather go for a cheaper contract and be able to buy 2, so that if this becomes a possibility, I can execute on this. Because if you bought one trade for 1,000 now, it's like, oh my gosh, I'm double my money. What should I take it? Should I leave it? I don't like that. When I swing, I like to buy at least 2 contracts so I can make it risk free. Does that make sense? Any questions about that?
And once you make your money back, you get rid of the one contract to make it risk free.
Exactly. After I make my money back, after I double my money, I take the one contract off the table, I make it risk
Set your
free.
stops accordingly.
I set my stops accordingly. As it's going up, I'm setting my stop. I'm not gonna lie, if I see that 1K turn to like 5, 6K, I'm gonna be like, stops? Screw that, I'll take that off the table. You know what I'm saying?
You're taking the profit.
I'm taking the profits. Just
Okay.
being perfectly honest with you. If I turn 1K, first of all, I'm already taking my money off the table, and then it gave me another 5K.
I risk it.
Thank you, like for real, I'll take that off the table. Because there's 2 ways to increase your money with trading. Time or skill. What do I mean by that? I can stay in that swing trade longer and hope the more time goes by, the more money I make. Or I can duplicate the same trade over and over again, but the more confidence I have, increase my scale. What do I mean? So instead of starting that trade 500, I'm gonna start that trade either 4 or 500 contracts or 1K. Does that make sense? So I don't know whether you guys who's been to our challenge before? You've been to our challenge, you've been to our challenge, right? Nobody else, okay. So we did a survey of 200 traders, right? And we asked them, It was actually 202 traders. And we asked them, you know, how much money you're making, etc. And there was 5 groups. There was a group making no money trading, and then there was groups making 1 to 2K in profits every month, and then there was a group making 5 to 10K in profits every month, and then there was a group making 10K plus in profits every month. Okay, that's the group. Okay, the breakdown was this is about 70% of people, and this is a mix of people who were our students and not our students, by the way. Okay, this was about I think 25%, give or take, and the other after 10K was about 10%, and then this was about 3%, something like that, right? Here's what I found out: 100% of people making 5 to 10K in profits were all swing traders. So how does that make sense? Okay, great. So this is what they do. They got to a point with their swing trading where they know they're willing to risk X amount of money for X amount of return. So they might be willing to put 5K to a swing trade, and then it works out for them. Then guess what? They make 5K or 10K in profits. They double their money. They're done for the month, and they take a trade maybe once or twice a month. That's what these people do. Okay, I say why not do both? You have a question? Okay.
With the swing trades, do you still recommend sticking to the stocks that you guys like, the SPY and the?
Yes, I gave a whole list. So the list I gave: Nvidia, Amazon, Apple, Tesla, Meta, Google, AMD. What was the other one? Am I forgetting one, guys? SPY. SPY. I think that's the list I gave. Those are the ones I recommend and gold.
Mm-hmm.
As you become more familiar, you can venture out more. But those are good, solid companies that have good track records that. Oh, Netflix. Yes. Netflix was my first 30K swing trade. Netflix, right? So.
How long did it take you to make that 30K on that swing trade? I'm just curious.
2 weeks. Right? And guess how much money I put in the trade?
5.
30K.
Okay.
I doubled my money, you see? And that's what I'm saying. Like,
Yeah, to make
back then I was like, should I take half? I was like, just 30K, hell no, I'll take this off the
all
table.
of them.
That's what I'm saying. You have to be honest with yourself. There's no, like, nobody touching, like, oh, let's take 30K. I'm just showing you what you can do. If I saw 30K, I'll take, and that's how I knew exactly what these people were doing. They put 5K on the table, they made 5K, or they done it, like, should I really let this go? No, I'm taking that off the table. They do that about once a month, not that. Okay? But they built up their confidence to do this. Like right now, I can put 20, 30K in the swing trade because I've been doing this for a while. You as a beginner, you might have to start off with $100, $200, $250. Whatever you're willing to lose, you put that into a swing trade. And guess what? If you're in the swing trade, let's say you put $500 in the swing trade, you do not have to let the $500 go to zero. You can still put a stop at 50% or whatever the case may be and let the trade work out. Does that make sense? Well, I would tell you, so I was in a meta swing 2 weeks ago. And I saw negative 57% on it. I was pissed. I was like, Josh, what should you do? I opened the chart. I said, okay. This actually, it came back to the demand. So what do you think I did? I added size.
How long was the overall contract for?
It was for a month.
Okay.
Guess how long I was in that trade?
3 weeks.
No idea.
In 5 days, I doubled my money. I had a 500 call for March 1st. I bought it February 23rd, something like that. I made 150%. So I'm like, what I'm teaching you guys, supply and demand, like you can look for opportunities. Like this, like something. I'm not telling. I'll just like if I'm bored, I'll look for opportunities for swing trades, and if I like something, I'll start at position size. I'll start entering into it.
What do you have to see that makes you want to scale up?
if we come back to retest the area I like, but the trade idea is not invalid, then I would add size. I'll actually show you the meta trade in a second. I'll show it to you in a second.
I thought you were going to say confirmation.
Huh? Confirmation, but it's the same thing because remember, I day trade the same way I swing trade. I'm looking for yes confirmation, but I'm trading based off of risk to reward. Does that make sense? So for example, if I went in long, let's just say this is the thing. I get into a swing trade here. I go in long here. Another thing I do is pre-market. What do we do? What's the first thing we do pre-market? We draw what? Trend lines. The exact guide. I probably use the exact same process. There's a trend line here. There's a trend line here I could draw. Okay. So let's say, for example, I went long here on this particular day, right? Let's say I went long on this particular day. We went up a little bit. You see that? But what did we do the next day? We came what? At this point, my position would be red. This is where a lot of people panic. But if I look at this chart, I'm like, no, the trade idea still works. My stop would have probably been, if we break this level, that would probably be my stop. Did we break that level? No. Could we bounce right off of this and reject this and keep going up? Yes. So what am I doing? I'm adding size.
And is it because the same theory that's a higher high, so it's going to most likely?
So it's a higher high, but another thing about trend lines, a lot of times they're trend line retest. So we broke a trend line here and we retested it. I'm aware of that. I'm aware of retest. So I'm gonna get in. I'm getting in here. I add size here, and guess what? As we go up this little pop, this is where I'm taking profits. But you see how it took one day? So I like getting into swings where I draw a trend line, we break it, something like that, and I'm in that trade no longer than 3 to 5 days max. Even this one, look how we broke this one. Let's say you got in long here. Let's say you got in long here, right? We broke it. We got in long here. It went against me. You guys see that? You guys see that? Because this candle, let's say you got in long because it broke. It went against you. You guys see that? You'll be red on the trade. Maybe 50, 60%. You guys see that, right? My stop would have been here or here. Okay? Once I saw the next green candle, what am I doing?
Adding more.
I'm adding size because it didn't bring my stop. Okay? And what do we do after that? Day 1, 2, 3, 4, 5. Usually by day 5, I'm taking profit. But look at how much it keeps going. 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 2 weeks of straight bullish action. That's why I call it mini swing trade. I don't like staying in swing trades for a long time. And because of that, I do leave a lot of money on the table, which is fine. But I know what I'm looking for. Right? So that's what I do. I'll show you the meta trade in a second. But let's go ahead and draw the rest of these zones out here. And when you're swing trading, I'm either looking on, and this is a weekly charts, for example. So people who swing trade for weeks, they use a weekly chart. I like using the daily chart because it means I'm in on a daily basis. But I'll show you that, guys. I'll show you guys that in a second. So where's another supply zone, okay? We came here, we drew our first demand. Because when we came in, we pushed up, right? You guys see that? Over here, for some reason, when we got to this level, what happened to the market? We went down. Okay, great. So I'm going to draw a supply zone here. This right here is my supply zone. And it doesn't have to be perfect. Okay, you see this? And if you're in doubt, draw it as a zone. It don't matter. Does that make sense? So you guys see my zone. Okay, great. When we came here, this is the beginning of the zone, okay? When we came here 2-3 weeks later, what would I have done? What? Short. Perfect. One short here. My stop is above the high. Great. We came back up to it again a third time 3 weeks later. What am I doing? I'm going what? Shorts. I'm catching the move down. We came up to it a fourth time. What happened to the market? It went what? Shorts. The market likes to repeat itself. So swing traders love stuff like this where they can clearly see where the market is bouncing and then they can take it from there. And you see how this old supply around here became the new demand? You guys see that? Because the market likes to repeat itself. So that's what I would draw on the weekly chart. Then I will go to even here, right? We clearly have a supply zone here. Every time we came here, we rejected. So intraday, so imagine if I drew this on the weekly chart, and I'll just make it like, okay, this is a weekly demand zone, and this is how I'll do that. And I'll show you this, the key right here. I'll put a price target where the zone started, the basic candle, and I will edit it, and I will make it large, make it red, and it says do not show name on the right, and I'll just write weekly supply. Boom. There you go. Weekly supply. You see it's there? Boom. So when it came into it again on this day, and most recently here on the 22nd, I'm thinking that we're gonna go short. But imagine if you were day trading this. So you could have made money day trading it and swinging it, which I love to do. So if I notice a trend, I'm like, okay, I'm getting short here. Look at that rejection. And my profit target is where? The demand zone that was already drawn. You guys see that? Perfect. Okay? And then remember I said something to you? I said that a lot of times when we're going down, the market likes to retest the previous leg. Look at this leg right here. This was the and this is on a larger time frame, right? This was the other leg that it retested right here. You see, you see this leg two?
Mm-hmm.
And look at how the third time we came up, we tagged red 3. If I miss this and this, I'm getting short right there to catch the third leg. And look, if you drew another one right here in the beginning of leg 3, look at when we came up, what did we retest? The beginning of leg 3. And then what happened? We flushed. It's almost like the market is saying, I'm gonna do this for you 10 times. Like, pick one. Exactly. Pick one. So the same thing I see intraday, the same thing I see on a larger time frame. The chart is the chart, regardless of the time frame. And that's just on the longer time frame. So if we were to we move all these. Okay. Now if we were to go on a daily time frame, boom. Okay. Now it's a lot more clearer. Not only do we reject it, look at that pattern. Does that pattern look familiar to you? The 4 horsemen. There you go. That's my bread and butter. If I see that, that's like just say, Josh, come get paid. I love to see that. Because it's a daily chart, now I'm going to swing this. And I want to hold it for 3 to 5 days. Look at this. 1, 2, 3, 4, 5. I'm out. I'm gone. I'm gone, baby.
Can I erase this in bottom?
Huh?
That's not my visual. Can I erase that purple?
Oh, yeah, please. I'm sorry. Yeah, erase the purple line. But you see, when I see this, I'm like, oh, you love me, Mark. You want to pay me today. You just want to do that. But it took me time to recognize that pattern because I've been journaling. So I can tell you what it is, but you have to practice journaling this so you can build your own confidence in the setup. Look at this. 1, 2, 3, 4. I'm getting in here. My stop is above the highs. Or even if I want to put my stop above 199, I get short and I get a contract for 2-3 weeks out and I swing it. And I just let it do what it does. Okay? I let it do what it does. Okay, and also even look at this, even from the H, you can see it. See this H right here? You see the H? You can't see the small letter H, you guys can see it, right? You see the H, guys? Okay, good, awesome. Small letter H, so it's where's my pencil? I'm gonna do it right here. I'm gonna erase it, I promise. That's your H right there. You guys see that? Small letter H, okay? Nobody saw Wasi. I was barking up his. They're like, why am I thinking purple tinted? Like, what's
the vibe board?
I do need a vibe board. That's why I need to get a vibe board. But breaking it apart.
Oh, yeah. We got 2 at the office. They're massive, bro.
Bruh, it's annoying. But yeah, so that's on the daily. So when I'm swing trading, this is what I mean by I look for opportunities. And this is just on Apple. This is where it is today, right? If we come around this area again, and we start rejecting Apple, what am I going to think about doing? Getting into what? Shorts, puts, exactly. Because we're coming to retest a previous area of support right around here. And if we flush, my profit target will be right about here. Okay? Profit target will be right about here. And I'll let it do its thing. So that's daily. Then we go to the 4 hour. Okay? Now on the 4 hour, the same supply and demand zones still hold. Okay? So I don't even need to redraw it. But if you, as you can see, drawing zones on larger time frames, where you become smaller, you can trade it intraday. Does that make sense? So let's, for example, go to the 5-minute chart. Okay? Let's go to the 5-minute chart. Perfect. I'll even go into 30 so you guys can see this. Okay? Obviously, this is a weekly zone, right? You guys see that? This is a weekly zone. You guys see that? Okay. But on the 30-minute, right? When we woke up in the morning, we went from here all the way down here. So for me, this area is now an area of interest. Now look what happened yesterday. Where did we come in touch yesterday? To the T. So let's say the market opened in the morning. A lot of people are getting calls. I'm like, I'm gonna be patient. And you'd have had to wait till 2:30. But when 2:30 came, look at this flush. That's what I call easy money. Okay? Now let's take it to the 5-minute chart. Bless you. Okay? The 5-minute chart, we're heading up slowly. Okay? Number one, all the markets are like, okay, we keep supporting over here, so this will be like a little mini support for me around this area. But I'm waiting for it to come to supply, and as soon as we touched it, I'm entering shorts here. I'm targeting this area right here, which was the previous demand for the day. And you'd have called from 175 to 171, you'd have made your money, you'd have been done for the day. Easy peasy. Or even if you didn't even catch this, right? We noticed that for whatever reason, this area intraday was holding. So I would have done something like this. Because this area was holding, okay? We had a lot of consolidation around this area, right? We went up out of this area and we came down to do what? We tested. So what am I doing here?
Rounding it up.
Going long, and I'm targeting where? Supply. I take profits. I get what here? Short. I get puts here because we're targeting some. I get puts. Even if you miss this entry, this consolidation here, I'm getting into this entry. Okay, I'm getting short here, and I'm taking it to where? Now, let me ask you a question. Is there 90 EMA on this chart? Mm-hmm. Is there a 21 EMA? Is there a 41 EMA? Is there anything on this chart except for supply and demand? That's how you know it works. You don't need anything extra. Because 90 EMA, 21 EMA, those are all lagging indicators. This focuses on price action. Okay? So I'm just used to seeing the 90 EMA stuff on my chart. I don't need it to trade. I can literally spot this in real time. And I can say, okay, what's my next trade? We're going to break and we're going to do what? Isn't that what I said yesterday when we broke all-time highs? I said I'm going to wait for the break and the what? Then I'm getting long, and then I'm going to let it ride. So if you're spotting supply and areas of interest in real time, you can now write your zones, wait for a break, wait for a retest, and then take profits. Let's say you thought this was a break, right? And let's say you thought this was a retest. So you got long here, right? Let's say you got long here, right? My stop will be this low here. We break here, okay, good, I'm stopped out, whatever, okay? When we get here, what would I have done here? Done it again. And now they call this move up. By the time we get this move up, I'm already in a lot of profit. So I'm gonna take the profit already, or at least we got something to break even. But let's say you missed this. You came down to retest it again. This is what is called a higher low. Look at here, higher low. You get in calls here, you catch the move up to what? Supply. The same thing over and over and over. Prices are drawn to this zone. And this is Apple. I didn't trade this. We drew this from scratch. You can drop any chart to me and I will master it within an hour. Just using supply and demand zones. Because one thing that cannot be faked is price action. Everything else can be faked. You can trick the EMAs. You can break below the EMAs a little bit and then try to come back up. But when it comes to pure price action, because the chart tells on itself, I can tell that there was a lot of activity here because it went sideways for like forever, even on the 5-minute chart. Does that make sense? Even on the 5-minute chart, we went sideways forever here, and then we pushed up. Okay, so that's what I'm looking for when I'm trading intraday. And you guys can pick any other day we went to. I'll give you an example here. Okay, this was the demand from this day over here, for example. This is the demand for Thursday. You see that? Great. The demand for Thursday became supply for Friday, for whatever day this is. You guys see that? So this used to be demand, now it became supply. So I'll just, and that's why my charts look, I don't want to say messy because I don't erase my zones because I know that those zones may become active in the future. So until we break through them, I usually keep them up. Because what was a zone one day? Look at how this zone, this demand zone was from Monday. And we didn't come back into it until what? Friday. All right, this is 5 day, 5 minutes. So Monday, Tuesday, Wednesday, Thursday, Friday. So I like to have my zones up for at least 5 days because look at how price literally came down, waited, and came all the way back up to what? The same price level. So when I saw this, I already know, Josh, start going short. I'm going short here, or at the very least here, or what I would usually do, if I'm starting to think short, I'll draw a trend line. You see that trend line? Now, if I missed all of this, not only did we break the trend line, we did what? We retested it. And we retested, we rejected it. That's my entry right here. I'm catching it on the way down. Same thing on ES yesterday. Did I delete my trend line? No. Remember, we drew this trend line pre-market. Did we not? Remember this trend line we drew pre-market? Okay. We based it on it. We came up, we retested it, and what did we do to it? We rejected it. Trend line reject in supply. Sign me up for that all day long and twice on Saturday. So it's the same patterns, the same setups over and over again. You just have to practice seeing them and execute on them. The more you do it, the better you get at it. Okay? The more you do it, the better you get at it. And it doesn't matter what chart you choose. I can choose Spotify. Okay? And we can do the same thing. Okay? It literally does not matter the chart. Go to the year of the week, draw your little supply and demand zones right here. And then you go from there. Let's see here. I used to trade Spotify, and that's why I have all this stuff here. There's a demand zone here. Okay. I'll say this is a demand zone around here. So Spotify has been going up, so it's creating a lot of demand, okay? We came down this area. This area is also demand. So what I'm doing now, if I see Spotify come back down to any of these levels, what am I thinking?
Retest.
Go long. Okay, great. Now there's a supply zone here that we're approaching. Come on, draw me. Remove this. No, I want to remove this. Guess that's not a drawing. Let me see. Oh, here it is. The supply zone right here. See how we already started kind of rejecting it a little bit? I would love to wait for us to come into this level, and then I will look for the 4 horsemen. And what am I getting? Calls or puts? Puts. Perfect. That's my next trade I'm looking for. as a swinger, right? So just pick whatever chart you want, draw your zones on it, and let it do its thing. Even look at that. What's this look like?
Forward.
Thank you. Easy money. I don't have to think about it. I'm like, wait a minute. Closest supply, say less. And if I want to say, Josh, you want extra confirmation? Just draw a little trend line from the bottom to the top. You see we broke it? Oh yeah, easy money. I'm getting shorts. Now, my first target will be everywhere there's consolidation. So my first target will be here, second target here, third target here, fourth target here. And I think we're gonna go all the way down. We'll make our way all the way down. But once I see those four little buddies, that's like, talk to me. That's easy money for me. I love seeing those. And you can even take it intraday. Right? You can take it intraday. Clearly, there was supply in this area. Look at this. Let's say this is a 30-minute chart, right? Clearly, there was supply in this area. From this day, we rejected, we came down. We came here again second time, we rejected, we did what? We came down. We came here the third day, we rejected. So on all these days, I'm going short. So I would have made money intraday and swing it. But this is what I mean by you can't force the market to do what you want it to do. The first time it gave you a big move. The second time, intraday, this is a big move intraday, believe it or not. This is like literally an hour and a half of flushing. Okay? But look what happened on day 5. We finally broke all the way through. Which is why you always have to take the trade and position yourself. You never know when the market's going to give you the big move. But the little moves alone are giving you 1, 2, 3K days over and over and over again. Make sense? Awesome. Okay, I don't know why I've been talking so much. I'm so sorry. Okay, Courtney, your chart, ES.
Oh,
Okay, this is, let me go to the 5 minutes so you can see yesterday's action. What trade did you get into? What did you get? Is this good for you?
Two.
Go back to Dina because you know she be out.
I like to see a little closer, but it's not about me.
I'm just teasing you. Make it a little bit closer. Okay, this is better. I like this. Okay. So, where was your entry? Where was your exit?
Yeah, I got in at the demand. I got it right here.
Oh, you got it there?
Yeah.
I'm jealous. Okay. So what did you do? Talk me through the trade. I think you got it. What happened?
I seen it was in demand, but I knew it was like, from what we seen earlier, I knew it was an overall down day, but I was just waiting on kind of like a little pullback because it doesn't go just straight down. It's like waves. So I was waiting on that pullback, and once I seen that we were starting to go up, I didn't think we were going to go up forever, but I just knew, I felt like this was going to be a pullback. So I got in down here and rolled it up, and plus we were in the demand zone. So.
Okay. So what did you do? Tell me. When did you take profit? Did you put stops? Like, tell me.
Remember I told you I was trying to take profit at $40, but then I couldn't.
Where was the chart where you were trying to take profit?
I think I was right. I think I might have been in the middle of the base rally.
Right here?
Yeah, right around there.
Okay.
Yeah.
So.
And then I moved my stop to, once I seen it going in my direction, I moved it to break even.
So break even. Okay.
Yeah.
So how much money did you have in the trade?
I got in at.
No, how much money did you have in the trade?
Let's see, I spent.
You said 2 contracts, right?
Yeah, 2 contracts.
At the money.
I got at the money.
So like 250
probably.
or
yeah.
300. Let's say 300.
Yeah.
Okay. So with $300 from here to here, you've made 40, which means you were up about 14% on the trade.
Yeah, then we kept going till we got out of there with 148.
What did you get out of ultimately? Here.
I think it was like closer up there, but I was like I was on the line with the reps. So I stopped paying attention to the chart.
After that, okay.
Yeah.
So pretty much what happened to Courtney is that he got in here, it went up in his favor. He put a stop at break even, but for some reason he couldn't exit the trade. He tried to take profits at $40 around here, so he had to get on the phone with the rep. And how long did that conversation with the rep take? About 15 minutes.
It was through
the chat.
The chat, yeah. So it was probably about 10 minutes.
So 10 minutes later, we got around here,
Yeah.
and he took profit here. So even by accident, you made more money. So you
Yeah.
ended up making 148 on 300, which was 50%
Yeah.
on your money, right?
Yeah.
But that's the benefit of getting in demand. If you're getting in somewhere around here and you got caught up in this, you might not have been so lucky.
No, I just wish I would have had more patience to actually
Wait for it to
hold a little bit.
And that's the thing that gets me too. Sometimes you just wish you're like, dang, I don't have this much money on the table.
Because it was still a rally-based rally.
It was still a rally-based rally, but that's all hindsight though.
Yeah.
Like in between where you're like, because think about, I just want you're thinking like, okay, we're basing around here, can we reverse here? Like you never know. But this happens to me all the time where I'll catch this move and I felt good about myself. Like, oh yeah, Josh, you were patient. You didn't take profit here. You caught this move, and I look back. I was like, damn it, Josh, you still left half the move on the table. And that's where you journal. That's why now I'm willing to break you because I was like, I want to catch it. I want the whole spaghetti.
Yeah.
You know, especially when I see stuff like the Four Horsemen. I'm like, oh my god, I want to catch that, right? But yeah, so that was a good trade. I like that trade. What would you rate that trade?
For me, I probably would have gave it like I like my entry, but as far as like being patient, so I'm probably gonna give it like a C plus.
Okay, C plus. What would you give that trade?
C plus too.
C plus. Yeah.
Same.
C plus.
Where did he get out again?
He wanted to get out here, so let's just choose here, okay? Because of a mistake, he couldn't get out. He actually took profit here, but his emotional tolerance would have kicked him out here.
B.
B. Okay. I like your entry, but yeah, the patience. I would give it that like a B minus C plus too because, like this little move here, and trust me, it's a lot of money because it's a couple hundred, sure, but look at you missed the big rally count. You missed.
Yeah.
I would have been sick if I got to Burbank and I missed this and this. I would have cried. I'm not gonna lie to you. I was like, do better, Josh.
Yeah.
Do better.
So do you suggest we just be patient there, move up our stop, and ride it up?
That's what I do now. I move up my stop, and I'll let it do what it does. Because I would at least want to come here. This would be my first profit target. This particular line here, and I might have taken profit around here, honestly speaking, and I would have felt like I did a good job. I just said, oh, dang, I missed all of this. But at the end of the day, it's easy to feel better about yourself when you see 1,500 a year and count that thing. You see what I'm saying? And that's where the trick comes in, and you guys have to judge your own emotional tolerance. I just like the dopamine. I like to see some level of money in my account at the end of the day. But if you're willing to wait, just put your stop at break even, and then just let it see whether it'll come to supply, come to the next area of interest, right? Because if you can't wait for the day you have the picks for this, you're gonna make a lot of dough. And I'm actually working on this, honestly. This is what I'm working on. I'm working on catching the whole move now. But I still move my stop up to at least secure some level of profit after we have a huge push. Okay. So yeah, I'll give this a trade. He got it at the very bottom. I'm jealous. I'm jealous of this. This is a great trade. Okay. Al, were you able to take a trade after?
Yeah, I did.
Okay, where did you get to your trade?
It's right at. I saw it on the 15-minute chart.
Okay, let's go there. Go 15.
Looks like it was right at 1,500 hours at the bottom.
Where?
Right.
Yeah, to the right, the drop.
Okay.
A little bit more to the left.
This
I think
one?
it was, more like 1,500. Like if you look at the clock at the bottom.
Oh, 1,500. Okay.
Yeah,
Okay.
right
3
there.
o'clock. Okay.
Yeah, that's where I got in. I saw that it was coming out of that supply zone
Uh-huh.
and a rejection, so I caught it coming down there.
You caught shorts?
Yes.
Yeah. And I think the 90 MA was around here too, to be honest with you. So you caught shorts, and when did you get out?
I got out as soon as I could, but I couldn't get out. I was having trouble getting out of the trade. So I ended up on talking to technical support team.
Why are they giving them problems? Like, how is it hard for them to help?
No, I think it was because I'm just getting familiar with the technology, so I actually got out of the chat line.
And I don't know
I
why.
haven't actually gotten in it yet, so I don't know.
Yeah, sometimes. So here's what happens with us, right? And I've told you guys about Rufus too. Because we teach you guys the setups and the process, you're gonna get a chance to make money. Sometimes people do it without being completely familiar with how to get out of trades.
Mm-hmm.
I've had people call me, talk about I'm in X amount of profits, how do I get out? And I have to FaceTime them. Okay? The setups work, right? But please at least know how to put a stop to protect yourself and get out of trades. That's why I like active trade. I just hit the flat end button and it'll kick me out of all positions.
Yeah, that didn't work for me
Yeah, I don't know why it didn't work for you. It works for me. So I would try it again, and if it still doesn't work for you, then I'll just
know
cancel
hit
your,
this. Yeah, I
your
just know
stop.
cancel. Yeah.
Cancel your stop and then hit flatten. Yeah, but it should still work with your flatten. It works for me with my flatten. So that move down, that's a good move down if you caught even a piece of this because the volume was pretty good here. And here's
20%.
You caught 20% on that trade. That's good. See, if you know your percentage on trades, you can then work backwards and say, on average, I'm making X amount of percentage of my trades. Okay, now how do I adjust my capital to see how much income I want to potentially make? Does that make sense? And work your way up that way. Here's the potential issue with trend trading to a certain degree. This is like a drop based what?
Sure.
Okay. A lot of people start getting puts here, right?
That's
And what would happen to you?
Flat.
Thank you very much.
Because of the zone.
Because of the zone. And that's why I say sometimes it works, sometimes it doesn't. Now, if you got puts here, where should be your stop?
no.
All the way up here. So you'd have risked this much to protect, like this was a drop-based drop that worked out, right? It worked out, okay, this was a decent drop-based drop. But even before it worked out, look at how it shook people out. You see what I'm saying? That's why I like getting as early as possible. So me, if I see this drop and I start seeing this base rejected, I'm in here, to be perfectly honest, and my stop will be like here. I'll give you a little bit of room. Because of risk management.
Right there.
The green line?
Are those price actions?
No, remember high and low of days.
Okay.
That's why they're important, right? I'm having my high and low of days being put up. Here's another previous high of day. And look at how this low of day from yesterday, this high of day yesterday, the market respected it.
Gotcha.
You see? So your job as a trader is just to put on your chart potential areas of interest where the market can react.
Mm-hmm.
And when you see a confirmation in that area of interest, then you execute.
Gotcha.
That's it. I'm not trying to guess which area is going to react at. I'm not trying to predict it. I just wait for the market to get there and act. And once it acts, I take action. Like this little move down here, we start rejecting, and this formed the higher what?
Low.
That's my entry into calls. My stop is below that low. Look at that tight stop. Okay? Even if I just got it to here, I've already made it 2-to-1 risk to reward. 3-to-1, 4-to-1, 5-to-1, 6-to-1, 7-to-1, 8-to-1. If I'm getting into the trade somewhere here, my stop is here. Now, even if I catch all the way to the top, now that's a 1-to-1 risk to reward. Okay? So just drum that to your head. Risk to reward, risk to reward. That's how you protect yourself from losing money. Now, I know some people who they're trend traders, and they know that, okay, I'm a trend trader, so I'm only going to trade on days where the trend is in my favor. So, like, they'll say, okay, this is a bearish trend. I'm going to trade this, boom, or trade this. And that's it. I'm done for the day. Or I'm done for the week. I'm done for the month. That's fine, as long as you know your particular trading and your risk tolerance. Right now, this looks like it wants to keep flushing. So on Sunday, I'm interested to see what the market does when it opens. Right, so that trade for you, I like it. I like your entry. As far as the rejection here, where was it? Right here, right? So you call it a continuation move, okay? What would you grade?
Candle before.
You called it this candle.
Halfway, yeah.
Okay, halfway through. What made you get in? That's my question.
The rejection. The previous candle.
This one right here?
The one.
Oh, you got the rejection of this candle.
Yeah.
I caught it all the way from here.
No, not way up there. It was more
Here?
halfway down. Yeah.
Okay.
I saw the rejection.
So pretty much you saw the rejection, you waited for confirmation, then you got in. Okay, I see that. Okay, what would you grade this trade for yourself? C. Okay, well, and what would you grade this, Courtney?
Probably a C plus because the fact that he was able to recognize the
The rejection.
rejection and then get in and not really hesitate that much. So this is C plus. But like just like me with the patience, like being able to control your emotions and write it down.
So I see why you got it there. See, what I do when I'm in doubt, I draw a trend line. So if I'm gonna go bearish when we've been going up, I'll draw a trend line. If I wanted true confirmation, once we break the trend line that's on there. So right around here it makes sense. I can see that. Right? Okay. Rashawn, what would you grade this trade?
C plus.
C plus. Okay. Stephanie,
B
Give me
minus.
a B minus. Nina,
Where did he get out at?
he got out somewhere around here, right?
No.
The next candle.
Yeah, the next candle.
He got out here.
Yeah.
In this kind of okay. What would you grade that?
A C.
A C. Okay.
So I would want to see more profit.
You want to see more profit?
Yes.
Bitch, I can't. All the coins. Okay. I would graded this a B minus C plus. Why? I like your entry. Okay, you want to wait for confirmation. If you were in this candle, I can see why you got out because it looked like it was going against you, so I can see that. But I would have waited for at least to hit the profit target.
Yeah, about 3/4 down.
Yeah, so that's what I'm looking at. When I take part, I'm thinking about where's the profit target? Where's our profit target? Because that helps guide like how you act. Because the market's gonna try to trick you. That's trying to go back up, but you have to have your profit targets in place. Does that make sense? So I'll give it like a B minus. Okay, but me, you see how that trend lined up top? I got it right in the tippy top. I'm in that trade.